Hello and welcome. My name is Sara Kirk and I'm going to be presenting a short video blog to provide you with tips on how to budget a sufficient amount of expenditures in your district's debt service fund. Oftentimes, when the financial statements are prepared, likely by your audit firm as a non-attest service performed in addition to the audit, the debt service fund budget to actual schedule looks something like this. As you can see, this district had roughly $8.3 million in actual expenditures, however, only $8 million was budgeted. Therefore, the fund is presented as overexpended. For those of you that are thinking that overexpending the debt service fund budget is not a violation of a legal provision, like overexpending the maintenance and operations budget would be, for example, you are correct. However, overexpenditures in funds like debt service do result in the need for an additional footnote disclosure. This is a snapshot of page 6 of the fiscal year 2016-17 expenditure budget. Page 6 contains numerous funds for the district to include budgeted expenditure figures for. You will find the debt service fund in the lower right-hand side of the page in line 31. Here is a closer view of the debt service fund on page 6 of the expenditure budget. Today we are addressing how to determine the appropriate amount to report in the budget fiscal year column. Before we get into the specifics, it is important to gain an understanding of what bonded debt payments will be included as debt service fund expenditures in the audited financial statements in any given year. County treasurers handle the payment of bonded debt differently, and as a result of this and other factors, school districts record debt service fund transactions differently at times within their own accounting records. What is important to hone in on is what should and ultimately does get reported in the actual expenditures column within the audited financial statements. No matter when the county treasurer or you as a district record your bonded debt payments, the audited financial statements are always going to include as actual expenditures the January 1st principal and interest payments and the July principal and interest payments, reflecting the day after fiscal year end June 30. This is because the resources used to make these payments are accumulated within a single fiscal year. Please note that rarely do school districts make principal payments in January. They usually only occur once a year in July. Now let's take a look at a few items to take into account to determine the proper debt service fund expenditure budget amount. The first consideration is to take a look at your district's upcoming bonded debt requirements. If you have issued debt recently, or if you issue debt often, then you likely have a nice summarized aggregate debt service schedule like the one here, and as a result can find what you are looking for in one place. If you do not have an aggregate debt service schedule, you will have to compile the data from each individual debt service schedule for each individual bond your district has outstanding. As we are preparing to budget for fiscal year 18, you are going to want to identify the bonded debt requirements for January of 2018 and July of 2018, as we previously discussed, which in this case is $6,656,556.26. This will be the starting point and main portion of your budgeted expenditure figure for the year. Next, your district is likely being charged fees related to the payment and administration of bonded debt. The fees are wired directly out of the debt service fund at the county treasurer's office. The district will want to determine the amount of paying agent fees historically charged to the district and add in an estimated amount of fees for the upcoming budget to include in your debt service expenditure budget amount. Let's say for the purposes of our example, we're estimating the amount to be $5,000. The last item you may need to take into consideration relates to if your district intends to or has issued a refunding bond in the fiscal year you are budgeting for. There will be costs that the district incurs related to the issuance of bonds, the cost of executing the transaction. Bond issuance costs may include but are not limited to payments to financial advisors, bond counsel, bond trustee, escrow verification agents, rating agencies, and costs associated with printing and preparing the documents. It is important to note we are talking only about refunding bond issuances here. Remember, if the district issues general obligation school improvement bonds, that transaction and the resulting issuance costs will be recorded in the Bond Building Fund, Fund 630, which is a capital projects fund. Bond issuance cost expenditures may be reflected in your accounting records net of bond premium at the time the transaction is executed, and will not be grossed up until your financial statements are prepared later. So where can you find this amount so that you can budget for it? Within a document called the Summary of Sales Results, or within the bond offering statement themselves, there should be a schedule called the Sources and Uses of Funds. If you look under Uses, you will see a line for the payment of the cost of issuance. In this case, the issuance costs listed are a little over $160,000. Let's pretend for the sake of our example that this refunding was executed during fiscal year 2018. For the district example we just walked through, if we take the bonded debt requirements for January of 2018 and July of 2018, we add in an estimated paying agent fee amount based on payments we've seen made over recent years, and then consider the impact of any potential bond refunding issuance costs, we will be able to get to a number to record as budgeted expenditures in our debt service fund. For this district, the number would be $6,822,096.18. So take this slide and use it as your key takeaway. I hope this information is useful in preparing future budgets, and do not hesitate to contact me if you have any further questions. Thanks and have a great day.